Very good morning and a happy Thursday. Welcome to today's episode of Morning Well. Three things that we will talk about. Mnuchin says it's difficult, earnings roundup, and Fed Vice Chair's comments. US stocks fell again on Wednesday, giving up earlier gains as investors passed earnings reports and the latest haggling by lawmakers on coronavirus aid. All three major stock indexes slid from their highs in a choppy trading session. The Dow Jones, the S&P, and the Nasdaq ended in the red for the second consecutive day. Losses accumulated across the market amid the impasse between White House and Congress on the stimulus. The Treasury Secretary Steven Mnuchin said Wednesday that a deal ahead of election would be unlikely, while the spokesperson for House Speaker Nancy Pelosi said major disagreements remain, including the level of funding needed for coronavirus testing and tracing. Mnuchin doesn't expect to get stimulus agreement done before the November 3rd election, saying it would be difficult. We have spoken about this in the past. For me, the writing was on the wall that we are not going to get any agreement before the November 3rd election. I think the market also is jumping and looking ahead of what will happen post the election and what kind of stimulus that we will get, and it's reacting for it. But for now, this is done. On Wednesday, the S&P 500 was down about 0.7%. The Nasdaq was down 0.8%, while the Dow Jones was down 0.6%. The yields hovered around 0.73. Dollar was narrowly mixed against the G10 peers. Gold advanced. Asian equity futures are slightly in the red. In terms of sectors, communication stocks fell about 1.2%, while shares of tech companies fell about 0.6%. Consumer discretionary, healthcare and retail also broadly fell. On the earnings side, Goldman Sachs stood out. Goldman Sachs posted third quarter results that crushed analysts' profit estimates on stronger than expected results in bond trading and asset management. The firm generated $3.62 billion in profit, or 9.68 a share, exceeding 5.57 per share estimate by analysts. Company-wide revenue of about $10.78 billion also topped the estimate by more than $1 billion, driven by trading and asset management division. Wells Fargo had a different story. Wells Fargo's shares dropped by about 6% after the banking giant reported a weaker than expected profit for the third quarter. Company said that the earnings per share came in at 42 cents and the analysts were expecting a profit of about 45 cents per share. Wells Fargo's net interest income fell by 19% to about 9.36 billion from a year earlier period. Bank of America stock also was down. Bank of America fell by about 5.3% on the back of disappointing revenue figures for the third quarter. Bank of America said its revenue for the quarter came in at about 20.45 billion. Analysts were expecting a revenue print of about 20.8 billion. The company also reported a 16% year-on-year earnings drop. United Health was the other major company reporting. Shares of the healthcare giant ticked down about 2.9% despite beating on the top and bottom lines on its quarterly results. United's earnings per share came in at 3.51 on revenue of about 65.12 billion. The analysts were expecting 3.09 EPS on a revenue of about 63.88. So a beat on both counts, but still the stock was down about 2.9%. The company CEO said on the earnings call that COVID paints an uncertain picture for earnings in 2021. Lastly, want to mention a couple of comments from Fed. Fed Vice Chair Richard Clarida predicted economic output will take a year or more to return to its pre-pandemic level and even longer for employment. Additional support from monetary and probably fiscal policy will be needed. Richmond Fed Chief Thomas Barkin warned that a rebound in the US infections to about 50,000 a day has added uncertainty to the outlook and may discourage businesses from hiring or investing. He also said about 29% of stimulus payments have gone into spending, while 35% have been put into savings or debt payments. That's the update. Stay safe and healthy, everyone. I'll speak to you tomorrow.